ETF, our BATT ETF is really about the electrification of fossil fuels. A lot of that is happening, I think headline wise in the automobile segment, but certainly we're seeing kind of the world transition in terms of energy to cleaner, more renewable energy. And whether you're doing wind, whether you're doing solar, hydro, you need batteries, and that's kind of an interesting element that all of those technologies share, that when it's dark, that solar energy from the day is stored in batteries. When it's not windy, the battery that's connected to those windmills still can produce and serve energy needs. So we think batteries are going to be big, and there's a lot happening in the battery space, I think most publicly with electric vehicles. So when you look at the ETF, it's an index-based ETF with about half the portfolio invested across the spectrum in terms of the metals that are and materials that are needed to create these next generation batteries. So, the headline metal is lithium for sure, but there's also exposure to nickel, manganese. There's some exposure to cobalt, which is somewhat controversial as a metal. So we're really trying to kind of own the underlying materials, because that's going to be good as more and more demand for batteries happen. That flows down to the materials section, and those companies, those mining companies, we think are going to be well positioned. So that's half the portfolio. Then there's a 20% segment that's allocated to electric vehicle companies. These are some of the biggest consumers of really batteries going forward. We've seen some of the breakdowns of like a Tesla, and a Tesla takes, a little over 4,000 iPhone batteries to power a single car. So you start doing the math there and understanding, as Tesla and all the major automobile manufacturers start to go, 100% electric or even hybrid, the amount of materials and metals they're going to need is immense. And then the remaining 30% of the portfolio is allocated to the battery technology companies. So we've got the kind of materials and metals. We've got kind of the biggest end user, if you will, in electric vehicles. And then finally, these technology companies, they're really creating kind of and optimizing batteries and kind of the software that also interacts with these batteries. So whether it's extending range, making charging times less, finding new ways to utilize batteries and motors. These are, kind of the cutting edge technology companies. So make no mistake, this is a kind of a way to, in one investment, own kind of, we think, the future of electrification of fossil fuels and batteries. Fairly diverse portfolio, but it is a growth portfolio. So many of these companies tend to trade at, above average PEs, not unlike many of the other segments we just talked about. So it, is not a value portfolio, but we think over the long term represents some really attractive growth opportunities as the world, starts to really change. Now, I think this is going to be over the next, 20 to 40 years. But if that continues to happen, we think many of these companies are going to be well positioned to kind of ride that wave. I think we do have a scarcity problem looming in the future, not unlike what's happened to oil and energy over the last 40 to 50 years. At times, there's just not enough supply for a variety of reasons, and I think we're going to see that in lithium and some of these metals. It's one of the reasons. So there's some estimates that say within the next 10 years we might need like 7 to 10 times more lithium mined than what's currently being done. And lithium and all these metals, they're not the easiest to mine. Many of these sources are in hard to reach areas, maybe in some cases geopolitically unstable. They take a long time to get up and running from a mining perspective, whether it's permits or infrastructure. One of I think the unique takes, because there are other ETFs that kind of focus in this area. The reason we did not just own lithium in our mining segment and own some of the other materials and have the ability to own other materials is we do think that, necessity is the mother of invention, and there is going to have to be some other materials, some other technologies, whether that's solid state batteries, et cetera, that are going to have to be developed because we're going to hit a ceiling here fairly quickly in these metals. And let's face it, the majority of these metals are today produced, or controlled by China. And for U.S. investors or, the U.S. government, that's an issue. And certainly that's why we've seen some of the legislation passed to try to encourage more of that type of mining here in the U.S. So it's going to be, I think, an opportunity, but also a bit of a crisis.